The most challenging aspect of accumulating money, according to Charlie Munger, vice chairman of Berkshire Hathaway, company of Warren Buffett, is getting your first $100,000 in investing cash. But is that really true for everyone? If so, why is that? In this video, we're going to discuss the possible reasons why your first $100,000 is so hard and the next is easy, as discussed by Charlie Munger. After all, $100,000 is equivalent to 2 full years of salary for a recent college graduate making $50,000 annually. More than that when taxes are taken into consideration. The ordinary investor has to save their initial $100,000 for several years or even decades, which is understandable. Although Charlie Munger's $100,000 figure is rather arbitrary, the underlying idea should be obvious. It's simpler to increase a big sum of money than a little sum of money. Take the stock market's historical average growth rate as an illustration. The S&P 500 index's value typically doubles every 7 years or so. If you invest $1,000, for example, you may fairly anticipate that your money will be worth $2,000 after 7 years, and that it will be worth around $4,000 after another 7 years. However, if you start with $100,000, it's reasonable to anticipate that your investment will be worth $200,000 in 7 years and an astounding $400,000 in another 7 years. It is certainly preferable to have the most beginning money available, since the same concept always holds true. Investments double about every 7 years, regardless of the original dollar amount. Imagine yourself 15 years ago, when you were a somewhat poor graduate student, and you were thrilled to have the occasional $100 extra to invest. The following 15 years were devoted to the non-stop effort. Even if you weren't able to consistently save and invest, suppose you were still able to do so to the point where you now have over $100,000 invested in the stock market, despite the recent downturn in the first half of 2022. This is still true even if you weren't able to save and invest as much as you would have liked. All else being equal, you might anticipate having well over $200,000 in 7 years, $400,000 in 14 years, $800,000 in 21 years, and so on, even if you didn't make any further investments, which is improbable since you still have at least a few more decades of more working life still to go. As you continue to invest more of your money along the road, you can anticipate that the real sum will be much bigger. It may also be seen in terms of how long it takes to earn each additional $100,000. Although in this scenario, it took you 15 years to accumulate $100,000, it should only take another 7 years to acquire the following $100,000. The next $100,000 should take only 3.5 more years, and so forth. The idea should be clear. The time it takes to earn the same amount of money again tends to reduce as your assets rise, even with the fuzziness of that time frame due to unanticipated ups and downs of the stock market over time. Therefore, it's crucial to work hard and sacrifice to invest that initial sizable sum of money, since it just becomes simpler from there. Charlie Munger was correct when he said it was tough to get the initial $100,000. Years of labor, sacrifice, savings, investing, commuting, professional advancement, side jobs, pauses and starts, backsliding, and other activities were required. But here you are, let's say 15 years after you started investing, with more than $100,000 in a down market. If Charlie Munger's theory is correct, raising returns on my assets should be a lot simpler going forward, even if you continue to work in your job throughout the next years and decades, like how you did over the previous 15 years. However, those first 15 years of your life could not be without hardship and sorrow. Your marriage suffered because of the time you spent traveling and working, maybe leading to a protracted divorce, as well as expensive medical and hospital costs, etc. To avoid missing out on other delights in life that you can never get back once they're gone, regardless of what other joys or pleasures come your way in the future, be sure that you aren't making too many sacrifices to acquire that first $100,000. So, what do you learn from these? Post your comments in the space provided below. Thanks for watching.